Navigating a recession, smart investment strategies. With this recession hitting hard, I'm worried about my investments. What should we do? Recessions are challenging, but they also present opportunities. We need to be smart about where we invest during these times. Let's explore some potential investment strategies. During a recession, it's crucial to diversify your investments. Spread your money across different asset classes like stocks, bonds, and real estate. Diversification helps reduce risk. So which stocks should I focus on? Let's look for defensive stocks. These are companies that tend to perform relatively well during economic downturns. Industries like healthcare, utilities, and consumer staples are good examples. So, they're less affected by changes in the economy? People still need essential goods and services even in tough times. Additionally, consider dividend-paying stocks. Dividends provide a steady income stream regardless of market conditions. Bonds can also be a good option during a recession. Government bonds, particularly those from stable economies, are generally considered safer investments. So are they better than stocks during a recession? Bonds tend to be more stable and provide a regular income through interest payments. They are a good way to preserve capital during uncertain times. However, the returns may not be as high as stocks during economic expansions. People also invest in gold during recessions. Gold is often considered a safe haven asset. When investors fear economic instability, they tend to flock to gold as a store of value. Its price can rise during recessions, acting as a hedge against market volatility. Even real estate can be an attractive investment during a recession too, especially if you can find good deals. Property prices may drop, allowing you to buy at a discount. But won't there be a risk of declining rental demand? It's a valid concern. During a severe recession, rental demand might decrease. However, if you invest in desirable locations and well-maintained properties, you can attract tenants even in challenging times. But what about the fees associated with investing? During a recession, it's crucial to keep investment costs low. High fees can eat into your returns. Consider low-cost investment options like index funds and exchange-traded funds, ETFs. They offer diversification and have lower expense ratios compared to actively managed funds. Recessions can accelerate certain trends, like the adoption of technology and innovation. Companies that provide solutions for remote work, e-commerce, and digital services may see increased demand during these times. So, can tech stocks be promising even during a recession? Just remember to diversify and do your research. Not all tech companies will thrive during a recession. Look for established companies with strong financials and a history of innovation. During a recession, having cash reserves is vital. It provides you with flexibility and the ability to take advantage of investment opportunities when the market is down. And what about investing in emerging markets? Emerging markets can offer growth potential, but they also come with higher risks. Their economies might be more vulnerable during global downturns. If you consider investing in emerging markets, be prepared for greater volatility and conduct thorough research. So now, while a recession can be intimidating, it's not a time to be paralyzed by fear. By diversifying your investments, focusing on defensive stocks, bonds, gold, and real estate, and keeping costs low, you can navigate through these challenging times. So always remember, staying informed and making informed decisions are key to successful investing, especially during a recession. So let's stay proactive and weather this storm together.